Real estate. I want to welcome you to one of the great tips of the Australian property market. There's always some good tips and strategies when it comes to understanding real estate. Guys, part of our job is to observe the market and to also observe the competitive tensions in the market, to find places where we should be investing in real estate and to avoid traps where we shouldn't be investing in real estate. There's plenty of hotspots out there and there's a couple of not spots as well. For me, back in 2004, there were some great mining towns, some boom towns which grew and grew exponentially. Some of the places which you might be familiar with are places like Moranbah, Port Hedland and Karratha. Today, do I think those areas are worthwhile investments? Well, the warning signs have been out for a while, quite frankly. A year ago, I warned investors probably to steer clear of these marketplaces. What's happened now is starting to take shape. We're starting to see some real alarms when it comes to those marketplaces. Of course, in real estate, there are great places to invest, and when you come along to our property information nights, we do share where we think you should invest in 2012. So let's discuss what's going on in Moranbah. Part of our job is to understand where the media is focused on and where they're concerned about. And right now, there is a battle looming between the unions and between BHP and some of the biggest mining markets around the country. It is of real concern. Put it in perspective, BHP has stopped paying rent for new leases in Moranbah today. If you looked in Moranbah, which is recently advertised as a great investment hotspot, there's 160 properties for rent today. Rents are dropping in value because the mining companies are no longer renting properties. Properties once were advertised for $1,600 a week, today online are at around $1,000 a week. So the yield is coming down, and quite often when a yield comes down, a price comes down. Okay, there's volatility in those marketplaces. It's a very important lesson for us all to learn that after expansion comes contraction. And right now the Moranbah market is going through a period of contraction. Why? Because house prices got so expensive. Why? Because locals are leaving in droves from Moranbah. They no longer can live there because it has become a mining camp. The demographics of that market are changing. Once upon a time when mining markets started, the demographics of who lived in those mining markets was very important. This has been a huge change in mining markets around Australia. We see a lot of fly-in, fly-out workers who don't need to live in the communities, and we see a real restraint on housing. So mining markets have overcome that by creating mining camps. And one of the biggest challenges that faces Moranbah, for example, today is the state government's looking to put a 5,000 person mining camp in that town. What do you think that will do to house price values with another 5,000 people coming to town, potentially not needing the houses that are there? So what happened in 2004, we could pick up a house in Moranbah for around $120,000. And today, a house in Moranbah will cost you around $800,000, right? $800,000. And for the last couple of months, we've seen rent surge ahead, up to around $3,000 a week. Now, $3,000 a week is certainly a huge return. But the mining companies, because of pressure from the unions to provide affordable housing, have literally said enough is enough. This market can't grow anymore. It's not affordable. We're going to drop the rents. We're going to drop the rents because we're not going to rent anything. And that'll put pressure on vendors and put pressure on investors to reduce their rents. And it's starting to happen. And there's starting to be a bit of panic. People are starting to sell their properties for less than what they were a couple of weeks ago. So the contraction's happening, and it's a good lesson to understand. Guys, there's some great marketplaces around Australia where you can invest in real estate. We just put together a deal for $170,000 renting for $300 a week in a new mining market town, a new boom town. So don't be on the tail end of paying too much for property. Look at it differently. Look at investing in an opportunity in a marketplace that hasn't taken off, where we can still get a good rent, where we can create positive cash flow, and we can create capital growth. To find out where these areas are, and there's plenty of them around, come to our property information nights. They're held all around the country. They're easy, just register online and one of our friendly staff will be in contact with you to make sure you know where you're going. And guys, I hope to see you soon and happy Easter.